This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on February 28th, 2019. Our time is 8:15 a.m. Mountain. Don't forget, time change is coming up on Sunday, March the 10th. The following Sunday, it will be St. Patrick's Day. U.S. dollar is at 96.09 this morning. Canadian dollar, 75.86. The pound at 1.32. The euro at 1.13. Gold at 13.18. Silver at 15.68. Gold-silver ratio is 84. Platinum is $869. Palladium over 1,500. 15.27. WTI 57.03. Brent 65.95. Nat gas 2.84. Bitcoin in U.S. dollars 38.1780, and Bitcoin in Canadian 5,032.09. Stock markets: the Dow is at 25,991, S&P 2792, Nasdaq 7544, the TSX in Canada 16,079. Busy week. Donald Trump meeting with the leader of North Korea in Vietnam, trying to put a deal together, and it did not happen. It crumbled. Trump ended up leaving early. Scandal in Canada with SNC-Lavalin. We'll talk about that. Also, Trump's former attorney, Cohen, testifying before Congress, saying that Donald Trump is the worst person in the world, pretty much. And Lady Gaga was at the Oscars and wearing a special diamond. Palladium, though, that remains to be the big story, and we do have stories in our free weekly newsletter about it. You can get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com. Palladium above 1,500, 1527.
Unbelievable, Randy. What a huge move. Now, on Wednesday, it was down $45 on the day. So the moves are getting much, much bigger for palladium. And again, still shocked that the market is trading at over 1,500. It's on shortages of supply. We know that Russia really controls the palladium and platinum market. And as I had mentioned before, that where I would not buy palladium, I would definitely buy platinum at 800, and we did see platinum touch 875 today as the high. So we've seen so far in the past couple of weeks a $75 increase in the price of platinum, which is substantial. Again, if palladium's over 1,500, soon it's going to price itself out of the market. We know that its major use is catalytic converters, as is platinum, and for some reason, when platinum was at 1,300 and palladium was down at 200, we felt that obviously it's much more economical for the car companies to buy palladium at $200 than to buy platinum at 1,300. Now the roles are totally reversed. We're talking 1,500 palladium, and we were talking a couple weeks ago 800 in platinum. There is no doubt that platinum had to move higher because, again, there's such a huge disparity, $700 difference in the price between the two metals that do primarily the same thing. So as we had mentioned before, that of all the metals at this point, the only one that I would look to buy right now, or a couple of weeks ago, was platinum at $800. Hit 875 this morning. I still think the platinum physically is the best buy, and the way to buy platinum is to buy it physically, buy it in coin form or bar form. Palladium is a little bit more difficult to purchase. We're not recommending purchasing palladium. The price is way too high, and again, eventually it's got to come down. One day alone, again, Wednesday, the market was down $45 in one day, which is substantial. As far as gold goes, I'm adamant on the fact that gold will not, is not a buy in my opinion until it breaks 1380 and closes twice above that level. The only way I see that happening is two reasons. And they both revolve around the president of the U.S. Obviously, Trump, if he did get impeached or thrown up because of this Russian probe or whatever, I think the stock market would plummet temporarily. The biggest thing would be the U.S. dollar would fall substantially, and a weak U.S. dollar would push up the price of gold. So that's the way that I would see that the price of gold could break that 1380 level, because at this point here, the dollar is trading in a range, and unless something drastic happens to the dollar on the downside, that's the only way the gold is really going to push higher is if the dollar falls, and the only way I see the dollar falling at this point if something happens with Trump.
Palladium's deficit-driven ascent has some analysts warning of the growing potential for a correction given the rapid sprint upward. The silvery white metal, used to control harmful emissions in gasoline-fueled cars, has surged about 40% in 4 months, hitting repeated records as a supply deficit deepens and demand surges. It's the top-performing raw material tracked by Bloomberg this year, and the threat of a strike by a mining union in key producer South Africa has added extra momentum this week. Now, signs that palladium is starting to be driven by more traditional factors like economic data and investor sentiment raise the possibility that finally the rose-colored glasses are taken off and prices come back to earth, according to Georgette Boyle, coordinator of FX. If this would happen, the sell-off could be very dramatic as prices rose at an almost exponential level, so I would fasten your seatbelts. Commerce Bank also issued a warning saying the commodity is showing more and more signs of being in a bubble. UBS Group AG strategist Joni Tevez has said there's a scope for deep pullbacks, even as market participants now talk about the potential for the metal hitting $2,000. Harold, I don't see it hitting $2,000, but if you get into a momentum situation, anything I guess is possible. I would say there's more chance of downside hearing the warnings than there is upside at this point, and maybe if somebody's invested in palladium, they may want to consider taking some profits before we have a major pullback. What are your thoughts?
And I agree with that. The fact is that, if it did go to 2,000, it would be just off the fact that there's a potential strike or a potential shortage. You've got car companies like Ford and General Motors that contract out many years for this particular metal, or in this case, palladium. So if they have contracts going out that far, it is possible that the market could do that. However, would speculators come into the marketplace and trade the futures market or trade this market up high enough? I don't know. I personally wouldn't. This is a bubble. At least that is the way it appears to me. And the fact is that we just don't buy into bubbles. The fact is that if the market has gone up to 1,500 based on the news of shortages in the market, that's eventually going to change. And I think the thing that is going to change it is the fact that there will be more platinum available at a much cheaper price. And I believe that's the route that these companies are going to go because they've done it in the past. So again, I would not buy palladium at this level. It's way too risky. The only market I would buy right now would be platinum. And again, I would not leverage it. I would not buy it in the futures market. I would buy it physically. And again, we saw a $75 move in the past 2 weeks.
The U.S. government is $22 trillion in debt. They're running deficits of $1 trillion and a half. They need to raise the debt ceiling in the United States. They will run out of money by fall. We now actually have an idea of how much Alexandria Ocasio-Cortez's Green Deal would cost: $93 trillion. A lot of money. That's right. A lot of money. Feeling is, from the people who support the Green Deal, just print money. We don't really care that you'd have massive deficits because we're saving the world here. Jerome Powell, he was testifying, the Federal Reserve Chair, asked about unlimited borrowing supported by Ocasio-Cortez, and he says it's just wrong. An increasingly popular theory espoused by progressives that the government can continue to borrow to fund social programs such as Medicare for everyone, free college tuition, and a conversion to renewable energy in the next decade is unworkable, according to Powell. The idea that deficits don't matter for countries that can borrow in their own currency, I think it's just wrong. Harold, that is a massive number. You're $22 trillion in debt. The money that would need to be printed, $93 trillion, you would be a banana republic if that actually was allowed to happen. Your currency would be like confetti, like Zimbabwe. Just absolutely crazy.
It is, Randy. I just can't believe. I'm wondering if she's just doing this just to hear herself speak or see herself written up in the papers, because she's supposed to be an intelligent person and she's coming across as a total moron. I mean, if you don't understand economics, if you don't understand that the more money you print, the weaker your dollar becomes, meaning that the inflation in the United States would be so high, our dollar would be worth that of Venezuela. And the fact is that the country would go under. She should just be thrown out of office. I just can't believe that she's actually getting press time, that people are actually considering or listening to any type of merit that this has. $90 trillion to support the entire country so people don't. I just don't understand. I would say it's laughable, but it isn't. It's just total stupidity.
Millennials are facing $1 trillion in debt. More than a decade has passed since young Americans face debt levels this high. Debt among 19 to 29-year-old Americans exceed $1 trillion at the end of 2018, according to the New York Federal Reserve Consumer Debt Panel. And this is the catch-22, Harold, with the U.S. economy. They need people spending money. 75% of the U.S. economy is people going out and spending. Yet, if you have millennials, which are a major force coming behind the baby boomers, needed to spend to keep the economy going, but if they're in that debt, you're going to have a problem because they won't be able to spend. They'll actually be in a position where they have to reduce debt. This is where the economy could take a hit going forward, Harold. What are your thoughts on that?
There's just no way in the world that that's going to work. The fact is that the government is a business. Money has got to come into the country in the form of taxes, in the form of business deals that they do with other countries type of thing. Just like any other business, you've got to have money coming in, then you've you've got your expenses going out. It's that simple. The fact is that if they're going to continue to look to go back to 2008 and 10 and print money and that type of thing, we should have learned our lesson from that point because we're not out of those problems. All the things that was done back in 2008, 9, and 10 to right the ship, to the quantitative easing, to printing all that money, to bailing out all the corporations and the insurance companies and the banks, where some of it worked out, a lot of it didn't. And a lot of it has been swept under the rugs. And it's only going to show itself, I think, within the foreseeable near future. So, you don't know what the true picture is because we don't get a true accounting of it. But there's just no way in the world that the U.S. is in good financial shape when you owe $22 trillion, when you've got the millennials that have a totally different work ethic, way of looking at money, the way of spending and everything than our generation did. I just don't like the way that the direction of the country is going. And I believe moving forward, especially if the Democrats got in, you're looking at a situation that is, socialistic, to where the government is going to take care of the people that don't want to or can't take care of themselves. I think it's just a recipe for disaster.
The stock market rally in 2019 is one for the history books so far, although we saw last year in 2018 a very strong start to the year, and then at the end of the year we saw the markets go down strongly. Now the Dow has rallied more than 11%, while the Nasdaq is up 9%, the TSX is up around 12%. But there are those that are warning that now is a time to get out of the market. Father of Reaganomics, his name is David Stockman. He is saying that get out of the market, bond and stock market, and put your money in cash. Now, he's been saying this for quite some time. He ran the Office of Management and Budget under Ronald Reagan in the 1980s, and he told Fox News' Neil Cavuto that investors ought to get out of the market and retreat to the presumably safe treasuries and cold, hard cash. He's been saying this for quite some time, Harold. So far, the markets continue heading on up. But taking a look at the way the debt and deficits are in the United States at some point could be very correct.
Could be. Again, there's certainly situations out there that could really devastate the market. We've known they've always been there. $22 trillion in debt as the interest rates were going higher was a recipe for disaster for the country. They couldn't afford the interest increases on that type of debt. You've got so many other situations that could explode that I personally, and I've made this known for the last 18 years, I don't have anything in the stock market. The stock market, where it should be primarily used for building of wealth. People put their retirement funds in there. People rely on the market, to be a fair and somewhat safe market, and it's not that. It's not fair in the sense that we know that there's a plunge protection team. We know that there's times that the markets are manipulated. But on top of that, it's also extremely volatile and not suitable for most investors, because the Dow is the most volatile market out there. Just look what happened again last year in 2018, where the market was looking strong at the beginning of the year, but all it took was 2 months to wipe out all the year's losses. And the fact is that the general public, they normally buy at the wrong time. They're reading the newspapers, they're watching financial news, they're seeing the markets going up and feeling that they're missing the boat and people are making money and they're not. Then they get in when the market's at 26,500 and the market drops down to 23,000, and next thing you know, they're down substantially. And a lot of people just don't buy stock dollar per dollar. They buy it with leverage. They buy $10 worth of stock for $1 worth of money. And when the market goes down that low or takes that type of drop, they end up having margin calls and losing all their money. So the market is not suitable for most investors. With the hedge funds being as aggressive as they are, with most investors not really understanding the market, so they leave all the decisions to their broker, or now with discount brokers, or the fact that people are conscious about what they're paying in commissions, they figure that they can do it on their own, and it ends up costing them all their money. So I'm not a big fan. I think that the market itself is too volatile, way too risky, manipulated, and not suitable for most investors.
Connect with Harold at rarecoloreddiamonds.com. Get the companion to our podcast, our free weekly newsletter. Learn more about investing in hard assets. Take a look at Harold's website, rarecoloreddiamonds.com. The Kraft Heinz food empire has a debt problem. There are a lot of corporations that have a lot of debt, and Heinz took on $28 billion when it was taken private. Financing was a key ingredient that made the marriage of Kraft and Heinz possible. In 2015, the Warren Buffett-backed food giant's serious missteps have brought its bloated balance sheet into sharp focus. Last week, Kraft Heinz posted a massive loss of $12.6 billion and warned that 2019 profits will tumble. The stock was down 27% on Friday. They plan on selling different brands off to pay down their $31 billion in long-term debt. Monster Beverage, which sells energy drinks, has skyrocketed more than 68,000% over the past 20 years, crushing the 200% gain by PepsiCo and 40% increase by Coca-Cola. Tim Hortons opened their first restaurant in China as they look to expand around the world. But Harold, getting back to Kraft Heinz, there are some companies out there with huge debt issues.
You better believe it. And again, some of them are shocking. First of all, Kraft, one of the biggest companies in the world, is in trouble, obviously, but that sort of came out of the blue. Nobody knew that they had those issues. General Electric, one of the top companies in the world for a long, long time, is on the verge of bankruptcy or being, their divisions sold off because their stock has dropped from $80 down to about $5. Sears and Macy's and all these, massive retail giants are all closing down. The world is changing, Randy, and unless you can understand which direction it's going, I still find it hard to believe that people will buy that much online, clothing especially, when all the manufacturers and all the designers fit differently. Sure, you can send it back, but it's a hassle to send it back. And, even though they may reimburse you or whatever, you still have to go and do it. I'm surprised that Amazon and those type of that the internet purchasing is so successful that people won't get into their car and drive to a brick and mortar and try clothes on and do it that way. I know myself personally, unless I wear a lot of Hugo Boss, especially for golf, so I know how it fits. So I have no problems ordering that online. But I saw another manufacturer the other day that really caught my attention, but because I wasn't familiar with the fit of it, I took a pass on it. And you would think the more people would think along that lines, but they don't. And now you're getting all these massive retail giants that are closing their doors after, so many years in business. It's a very concerning procedure at this time.
The housing market in the United States. Home prices in 20 U.S. cities, according to the S&P CoreLogic Case-Shiller Index, rose in December at the slowest pace in 4 years, continuing to decelerate as buyers balked at purchases amid still elevated housing costs and falling stock markets. Now, for Manhattanites longing for luxury homes that may have seemed out of reach, some believe it could be a good time to make a deal. After Amazon backed out, there are some serious discounts. A 9-bedroom, 7-bath townhouse on the Upper East Side sold in mid-February for $29.5 million, 33% less than the original asking price after sitting on the market for 15 months. Last week, the top contract was a 7,000 square foot brick Georgian townhouse with a garden overlooking the East River. It sold for $18.5 million. It was listed in September for $21 million. Point being, Harold, real estate market on the high end is pulling back. These crazy big numbers that investors and people that were looking to cash out were getting, that is changing dramatically. And it's happening in Los Angeles, it's happening in New York, it's happening around the world. So that is a big change in the housing market.
Well, it is, and it's all tied into the stock market, because when the Dow is raging and everybody's making money, they feel comfortable, spending that type of money. But if you've got, $20 or $40 million to spend on a home or on a piece of real estate, you're worth an awful lot of money. But, for most wealthy people, their money is in the stock market. So when you see a 20 or 30% drop in a stock that you're heavily invested in, like Amazon, for example, what was it? It was down as much as 40% in 2018. If you've got most of your money in that particular stock, no, you're not going to feel comfortable going out and, and spending that kind of money on real estate. It's only when things are going well, when people are comfortable and confident in the economy, but they can't feel that way now. Trump is under fire. The fact is that I doubt that he's going to see that wall anytime soon. The embarrassment of not closing a deal, in Vietnam with North Korea yesterday, with his lawyer coming up and saying that he's a racist and the worst kind of bully in person that you could ever possibly want to meet. I mean, all these things are now hinging, and affecting, the economy in the U.S. People are nervous, where they may have been confident before when the Dow was up over 26,500, when it dropped to 23, and all these situations were mounting. All of a sudden, it's a loss of confidence, and people aren't spending the money.
Here in Canada, we have a political scandal. Former Attorney General Jody Wilson-Raybould testified before the House of Commons Justice Committee for 4 hours Wednesday, documenting in fine detail what she described as a well-orchestrated campaign by senior members of Justin Trudeau's Prime Minister's office to pressure her to reach an agreement with SNC-Lavalin to help the engineering firm avoid criminal prosecution. SNC-Lavalin engineering construction firm employ about 9,000 people in Canada. They were caught bribing over in Libya. As a result, there were going to be charges brought against them here in Canada. Now, she did not go along with it. As a result, they removed her from that position, the Trudeau government, and she is a Liberal. She's a member of the caucus, but she's speaking out against them now, and we have a full-blown crisis here in Canada. Prime Minister Justin Trudeau said, I didn't do anything wrong. I disagree with Jody Wilson-Raybould, the former Attorney General. So you have the Attorney General saying one thing, and we have the Prime Minister saying another. They're both in the same party. And you have the opposition parties knowing there's an election coming up in the fall, seeing this as red meat to chew on. Harold, it's a very interesting time here in Canada. It's not as good as Cohen, but it's pretty darn close.
Yeah, I'm sorry to see that that's happening at this particular point. Politicians are just a different breed, my friend. They're just a different breed, and they think differently than in a lot of cases, business people do. So it doesn't shock me that this is going on, but, politicians are good at passing the buck. And, I had nothing to do with that unless it turns out to be good.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. I did tape the Oscars and was flipping back and forth from a hockey game to the Oscars. I really wanted to see Lady Gaga sing with Bradley Cooper. I did see earlier in the day the movie A Star is Born, and I really highly recommend it. It is a great movie. And Lady Gaga and Brad Cooper at the Oscars, if you've missed their performance, go on YouTube and watch it. It is amazing. It was the thing that made the Oscars, and not having a host who really helped. But one thing that really caught my eye was Lady Gaga and this giant yellow diamond around her neck. And I was like, wow, what is that? Well, Harold, it turned out to be the Tiffany diamond, 128 karat yellow diamond, and it has an amazing backstory. In its 144 years, Lady Gaga is only the third woman to have worn the Tiffany diamond, and both previous outings were over a half century ago. But Harold, what a great idea to bring out the Tiffany diamond and allow Lady Gaga to wear it. Great promotion.
You better believe it. At the right time, at the right place. And I agree with you. Her and Bradley Cooper, everybody's talking about, their song together, and it was beautiful. And she did a phenomenal job. And obviously, to see that necklace and to see that huge yellow diamond, she looked beautiful wearing it. It was just an amazing thing, and it's something that she'll remember for the rest of her life. It's a priceless piece. One of the hallmarks of Tiffany type of thing. So, it was great to see it again. Great to see her wearing it. And, for all those that, saw the Oscars, I went out afterwards and saw Bohemian Rhapsody. It was phenomenal. But the best movie this year that I saw was The Green Book. I just thought it was sensational.
Two movies I'll have to check out. Thanks for the recommendation, Harold, and I would recommend A Star is Born. I thought it was very well done. Lady Gaga is an amazing talent. If you want to find out more about her on Netflix, there's a documentary, Lady Gaga, 5'2". It is very well done. As we get towards the end of our podcast, some interesting notes. The stock market meltdowns in 2018 obliterated $1 trillion of fortunes off the world's richest individuals. This is scary. Smart assistants, Amazon Echo and Google Home, they could soon come with a moral artificial intelligence to decide whether to report their owners for breaking the law. How does that scare you, Harold? You have one of these things and it's calling the cops on you because you're doing something illegally in your home. Yikes, scary.
That would be horrible. And something, I could see that happening. I saw somebody sent me an email the other day, and that's basically what it depicted. It was hilarious. The other thing I saw the other day was on China. We haven't talked about these ghost cities for a long, long time. And with the tremendous amount of Chinese people that are moving from, outside of, moving into the major cities, the Chinese government has built these magnificent cities. I mean, absolutely magnificent, with hospitals and shops and malls and homes and condos. And there is not a single person living in them. And it's been that way, how long now, Randy? For at least 5 years, maybe longer.
Definitely 10, maybe even.
So I'm watching this thing last night. I showed it to my wife, who never even knew that this existed. Now everything is working. The stoplights are working. The crosswalks are working. Everything. The difference is there is not a single soul in these places. And they built several of these cities. Now they're trying to figure out, how in the world to salvage this, because they're 20 or 25 miles outside of the major cities, and the people don't want to be that far away. So now they're talking about building transit, high-speed transit that will get them into the city much quicker. But the fact is, if it's been almost 10 years, and I think that's pretty well close to the number, so much of these places have deteriorated because they can't be kept up. So it's just a massive faux pas on the Chinese government's part, but it's really scary to see an entire city with not a single person in there.
Unbelievable. India and Pakistan say they have launched airstrikes against each other, some geopolitical trouble. When SpaceX Falcon 9 rocket took off last Thursday, it was carrying humanity's entire backup plan with it. 30 million page long compendium of humanity's greatest cultural offerings encoded on a special design disk meant to last a billion years. They sent it to the moon for safekeeping, but what happens if you can't get to the moon? Oh well, California, the next big one may not be an earthquake. It could be a volcano, and they have put out a 50-page report on that. Here in Alberta, and this is all across Canada as well, it was the coldest February in Edmonton in the last 40 years, and I know that was the case across Canada with lots of snow and cold weather after it being very mild. We're not alone. It hit the United States. In California, February 2019 ranks as the coldest February in downtown Los Angeles since 1962, 60 years ago. Finally, for Harold, this is a good one. An autographed Tom Brady rookie card sold for a record amount in an online auction. ESPN reports that the Brady card was part of the 2000 Playoff Contenders Championship ticket collection. The same year Tom Brady was drafted by the Patriots in the 6th round of the 2000 NFL Draft. The rare card, one of only 100 made and one of only 2 which received a grade of 9 or higher by the Beckett Grading Services, fetched $410,000, smashing previous modern card record set 4 days earlier when a 1997 Michael Jordan card generated $350,100. But as Tom Brady's career is starting to wind down, the greatest of all time, his memorabilia will start to really gain in value, and Harold, we're already seeing it.
You better believe it. You know, all the talking heads try to compare Brady and Jordan as who's the greatest athlete of all time, but just based on their cards, I think that answer has been taken care of.
That's very true. Tom Brady, Harold, he is the greatest.
I believe you, and I agree 100%. I got to say that all the listeners out there, Randy sent me a picture this week of Wayne Gretzky and Garth Brooks sitting at, it was an Edmonton game, was it?
It was an Oiler game in Nashville.
Yeah. And most of us grew up watching Saturday Night Live and remember Mike Myers and Dana Garvey as Wayne and Garth, and that's who they were.
Mm-hmm.
Wayne Gretzky and Garth Brooks. It was an amazing picture and great to see.
Party on Wayne, party on Garth. Dana Carvey was on the Oscars along with Mike Myers and introducing Bohemian Rhapsody, the movie. Great moment, and it was fun to see Garth Brooks and Wayne Gretzky sitting in the Oilers box in Nashville, which surprised me a little.
You bet.
Harold, any final thoughts?
Again, just watch these metals very, very closely. I don't think that we're going to see gold break above 1380 unless something dramatic happens with Trump and the U.S. dollar. Again, you know, I would not buy palladium at these levels. It's just way too high and could come crashing down. Wednesday, it was down $45 in one day. The only market that we really liked out of the metals short term was platinum, and it went up $75 in the past 2 weeks. Never buy, if you are going to buy metals, don't leverage them. Don't go into futures markets. It's way, way too risky. If you see a long-term situation and you want to own gold, buy it physically and put it away. You know, gold is never going to go to nothing. Gold is always going to be a viable metal. And again, it's tied into the US dollar. So again, at this point, I want to wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold, for your knowledge. 30 years ago this week, Jerry Jones bought the Cowboys from Tex Schramm for $140 million. Today, the Cowboys are worth $4.8 billion. That's for the Cowboy fans out there. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.